Hello, this is Jarad C. with Bear Bull Traders. It is March 9th, 2020, and I'm doing my first ever trade recap. The trade recap I have for you today is actually on two trades, but it's a new setup I am experimenting with called the equilibrium break. And I'm going to show you those trade setups on both the SPY ETF and OPCO Health, new coronavirus related stock. So shifting over to the charts, the equilibrium break is all about setting up for a trend change, usually a downtrend changing to an uptrend. And so far I've been able to notice this setup in pre-market more notably than other times in the market open. So with the SPY you can see this clear downtrend in the pre-market, a bear flag potentially setting up that ultimately fails and breaks higher. Ignoring this large wick, we have some orders from the previous day and other fills being allocated. And shifting over to the smaller time frame, you get to see what is essentially a wedge forming. A high at about 295, a low at about 290, 250, a lower high at 294 and a higher low at 293. What I essentially do is wait for the break, and I see on level 2 the buying pressure stepping up as soon as the tightening range is broken. And from that point, the follow through is rather significant. You can see here on the 15 that an entry at 293.50 led to partials at 294.50, 295.50, and about 297 for my final partial. This even went a little bit higher, all the way up to about 298, 299. And the follow through is really the most impressive part of this setup. The momentum that you see with this break, it typically doesn't come to retest the breakout area. It simply goes as soon as a direction is chosen. So the second trade is very similar, and it's done on OPCO Health. Once again, this is a pre-market setup with a clear downtrend, a breaking of the downtrend, a little bit of consolidation, which on a smaller time frame forms a high, low, lower high, higher low. Unfortunately, I didn't capture all of the necessary components there, but you can see that on the 5-minute with the high around 2.6, the low around 2.4, lower high 2.52, higher low 2.45, let's say. And as soon as I see the clear trend being formed or the direction being formed, I enter and have a very tight stop loss. Essentially, no retest should be done. It should be pure momentum at this point. With partials up to 2.6, 2.72, and 2.9, shooting for roughly 3, which is a gap fill entry on the daily. So this is the new coined equilibrium break setup. I'm going to be doing a lot of back testing and seeing if this is something I can find during market hours. The potential for the fact that the stop loss is so tight, the fact that there's very limited retesting and consolidation after the entry, and the simple fact that with a tight stop you can use things like options to mitigate your risk fairly well. You'd either close it within a couple of minutes if it's not working, or you get tons of follow through with the potential for sort of a double or a triple percentage gain when it comes to your call or your put. So lots of opportunity, really excited about this one. And yeah, that'll be my first ever trade recap. So look forward to doing more of these in the future. Feel free to leave any comments or questions about the setup, and stay safe out there. Thanks.